How's it going? It's Rocky. Welcome to week number 14 of the $2,000 weekly challenge. Every Friday, we review our weekly account statement from trading the E-mini futures. Initially, I was trading the micro, but thankfully I was able to scale up and now I'm just exclusively trading the E-mini futures. However, if I ever wanted to test out a strategy, I do that with the micro E-mini. And with these reviews, we also show some of the trades that we did for the week that were good, and also some of the bad trades that I did that we should definitely learn from. Please check out the timestamps in the description below if you'd like to jump to the area that you're most interested in. Our goal with this challenge is to earn an income of $2,000 every week through a common strategy utilizing the MACD and the stochastic RSI by using two types of charts. What you see on the left here is a time-based chart utilizing 5-minute candles, and on the right here is what is using a tick-based chart using 512 ticks and Heikin-Ashi candles. Details of my strategy is listed on the description below if you'd like to check it out, and also mentioned through the examples on most of the content we've released so far. I try to update this over time, so if you were ever curious what the latest strategy is, please check out the most recent video, and I do my best to update the description and that content. Also, with my strategy, keep in mind that it's not the right or the wrong way of doing things. It's just a strategy that I've become accustomed to and backtested, and I try to improve over time. I do recommend that you also, work on a system that you're comfortable with, either another system and taking bits from what I have, or maybe using mine as a base and improving it to a style and a system that best fits you. Just FYI, I have no chat room and I'm not trying to sell a course. I'm just enjoying sharing my content with everyone and learning from the community. So if you have any suggestions, please let me know in the comment section below. I definitely do read those, and for example, a comment from, I don't know his name, but his YouTube name is Comprar y Vender Sin Secretos. He's been saying that, hey, you should really cut your losses faster. And trust me, my friend, that comment really stuck to my mind, and I'm making it a point to really cut my losses quicker, especially if I have a short position. So any words of wisdom y'all have, please write it in the section below, because it definitely helps me, and hopefully my content is helping you with your trading as well. Now I would like to review our account statement for the week. And I'm happy to say that we did reach our goal of a minimum of $2,000 for the week. We did end the week at $2,865. I'm quite happy with the fact that all 5 days are green days, with the highest day being today, Friday, at $887, and our lowest green day was yesterday, Thursday, at $181. Now for the transparency part, with us reviewing our account statement. As I mentioned in the past, I'm showing this not because I'm trying to show off or anything like that. It's really more of a proof, I guess, per se, to show that my strategy, regardless of how simple it is actually working. And, it's something that I'm scaling up over time, and I'm seeing consistent progress. And really what I'm going for is just consistency right now, and as we scale up, we can get more gains, but really right now my goal is to be able to be consistent week in and week out. So for our statement for the week, you can tell we had a bunch of winners and also a bunch of losers. Our biggest trade was today at where we earned 1,300, and our worst trade for the week actually lost us about $520 here. And just one thing I wanted to point out is we're back to trying to withdraw money from our account every week. We did withdraw $2,000 this week, and that's the main reason why my goal is to earn at least $2,000 a week, because ideally I like to be able to withdraw $2,000 from the week, from the account every week itself. So as the practice we've been doing in our previous content, our ending cash is $24,071.22. But we did withdraw $2,000 from that, so we're going to add that back. And then our starting cash is $23,206.22. And that gives us our weekly total of $2,865. And again, just to put this into perspective, I try to convert that into an hourly rate. As you can tell, a lot of the folks who, share their progress on YouTube, they're thousands and thousands of dollars, and that's why they have a lot of subscribers. But my goal here is really just, to average retail investor like myself, where I'm just looking for modest gains that can scale up over time, and I'm treating it as a full-time job. And because I'm treating it like a full-time job, I wanted to show you that, high level, if this was a 40-hour week, we divide that total by 40-hour week, our equivalent would be about $71.62 per hour. So, that should bring it more down to earth to be able to understand what we're trying to do. We're not trying to do crazy to the moon type trades, just really something to replace our daily income from my previous salary that I had. And that's a number that hopefully someday we can convert to maybe $100 an hour. That's just how I do my goal. It's nicer to look at it from a different perspective as opposed to saying, hey, this week I'm going to make $10,000. I like to break it down to what it would have been as an hourly rate if I was working a regular W-2 or 1099 9-to-5 job. Now my goal is to be able to show you the good trades that I did this week and some of the bad trades that I did this week. And let me just adjust this screen so we see a little bit more. So what we're seeing here is the week's worth. On the left is the time-based chart. I changed the time frame to just show essentially from April 4th to April 9th, so this entire week. And then on the right here is the 5 days, 512 ticks, and the maximum for ticks really is just 5 days. So if you checked out my other content below, you'll probably notice that I have this new yellow horizontal line that I have drawn out here. Something that I've started doing recently is, when I trade the next day, which really the day starts at 3 p.m. Pacific time, I look at the previous price that it closed at, which I need to double check if that price is what it closed at 1 o'clock, at 1:15, or 2 p.m. Pacific. I actually am not sure. But essentially, I've been drawing a line of what that last close price is. It just helps me just gauge how the market is doing when I'm trading. Just to get an idea of, how much higher we are from the last close or how much lower we are. Just more of a reference. I'm not using it for any patterns or whatnot. It's just really a good reference point that's been helping me with the way I'm trading. Because sometimes when you're really close to that zero line, it can get pretty choppy and not quite sure which way it's going to go. So as I mentioned, Friday was actually our best day, where we made $887. But actually, Friday is the day that I would say I didn't do a good job trading. So yeah, I know it's counterintuitive. I made the most, but I wasn't happy with the way I traded. And I'm going to zoom into that, and I will show you why I wasn't quite happy of how I traded for this day. And if you're new to my content, something I like to do is when I enter a trade, I draw a blue vertical line to denote when I open a contract. And when I close a contract, I have two colors that I use. If I shorted, then I will draw a purple line, as shown here. And if I was long, then when I close a contract, I would draw an orange line. And something that I do is whenever it's a losing trade, I draw a circle as such, just so I can, look back later on and try to understand why it was a bad trade. And I'm going to show you here why even though it was a great plus 887 type of day, why I didn't think it was a good trading day. Now let's analyze here why the chain of trades that I did were actually pretty bad trades, and it's a bad way to start the day, and it could actually ruin the rest of your day if you don't snap out of it. So my first trade was at 8:20 in the morning Pacific time. I normally try to be awake by 6:30 a.m. When the market opens, but lately I've been avoiding the 6:30 to 7 a.m. just because it moves so fast that I just don't have the right speed for it yet. I'm not quite ready for it yet. So I've been trading a little later in the day where things calm down a little bit. So for this position, the first position I did here, I did end up shorting it, and the main reason I shorted it was I was following this big red candle here. So we did short it at two contracts at 33,473, and if you look at the indicators that I usually base my decision off of, you'll probably wonder why did I enter it, and it wasn't following what I have listed on the description or what I normally talk about on my channel here. And really, this is when I try to do something aggressive. I do an aggressive trade. I don't wait for the crossover to occur sometimes when I can see from the histogram on the MACD, and that is helped by the color changing here. You can see that it's bright green if it's diverging, but when it's converging, it's a darker green. So when I did enter this, it looks like it's about ready to cross there. So it would have been a bullish move. The crossover was ready. And again, that's the problem with the MACD sometimes because it's a lagging indicator. So for this one, I actually misjudged it. And again, that's because I was, being too aggressive. I should have waited until the crossover occurred. And that's why this was a bad entry on my part. But it was an aggressive, semi-calculated entry, I would say. And then if you look on the right on the equivalent tick chart, the candles, they were, consistent that it was pretty bearish. On the stochastic RSI, it was heading towards the oversold area, which we like. And again, if I look at the MACD, it was ready to cross over at that time. It's definitely, the histogram is diverging and is about to switch from a red to a green. And in reality, I entered at 473 and actually got low as 460 here. So I could have exited, at least $100, but I was too slow, and basically I ended up taking a loss here. Now going back to the time-based chart, but I actually ended up flipping long. So from 473, I flipped long to 481. So that was basically an $80 loss there. And what was bad about this is I was then long at 481, and from that 481, it started going down because there's an emotional switch that I did, and because of that, I took another loss. I had a long position, a loss, exited at 465. So from 481 to 465, that's about 16 points. So that's $160 that we lost on that second trade. So from the first two trades of the day, we were down $240 or so, which, I was already a bit frazzled at that time. So what I did end up doing is I told myself, all right, calm down a little bit, give it some time. And that's when we made our first good entry here. We entered at 33,740 at 8:45. And again, when I entered this, it was because I think I was still quite emotional at this time, but I was seeing the stochastic RSI was heading up a little bit. And as you can tell, it was again another bad entry. Had to live through a bit of a drawdown, but I just stayed patient because we were above the the last close, so it was a very bullish move for the day, I guess, because we were above it. So I was patient with it, and the entry from 470, I was waiting for it to actually go above 500 here, and because of that slight hesitation and greediness, I could have been out $300 and we'd be net positive for the day, but I didn't, and because of that, I allowed it to go a bit, the gain from close to 500 to 478. So we ended up just getting a gain of $80 here. And as you can see, from the two that we entered at 33,470, I again slipped short at 478. And what was bad is, at that 478, when I flipped short, it actually went up, and it ended up going to 497. So we lost another 78 to 97. That's about $190 that we lost there. And then again, I flipped long here. And when I flipped long here, this is when I said, all right, you need to calm down and just let it run. And what was great about this last trade, and it's actually what saved us for the day, is this is when I was looking essentially at what we normally look at. I can see from the MACD, it was starting to diverge. We're above the zero line. We're heading into the overbought area. And then if I look at the equivalent here on the tick-based chart, it's the same thing on the MACD. We're starting to diverge. We are above the zero line and we're heading to the overbought area. So that two contracts that we had at 33,497 ended up, going up a bit. I held it longer, and what really helped me here that I haven't really mentioned in the past is one of the reasons that I stayed confident is I was watching the 1 hour chart. So here's another chart that I have on the side that I try to look at. So here's a 1 minute, this is a 5 minute, and then this is the 1 hour chart. And this is, I just have a 1 day chart here. So basically, if I show what we are looking at here on my last trade, and you see how I just changed that to 5 minutes. It's not going to be a one-to-one where I entered and when I exited, but just by looking at it, I could see on the 1 hour that we were diverging as well, and we were on the overbought area. And that really gave me a bit of confidence to really let it run and do its own thing. And what was great is, we entered at 497 and then 33,497, and we didn't exit until 33,627. So let's just do the calculator here just to make our life a bit easier. Oops. So we exited at 33,627, and basically we entered at 33,497. So that was a 130 point move. And then essentially, since we're trading two contracts where each contract is $5, so two contracts is $10, multiply that by 10, and that trade right there from 10:35 a.m. to 12:30 p.m. So almost a 2 hour trade netted us $1,300. So that's why Friday was, I would say it's our best day as far as our net gain, but it's not our best day as far as trading goes, because I was flipping long and flipping short rather quickly, and it just wasn't a good way to start. So one advice is make sure you're ready and fully awake when you actually do trades in the morning itself. Next, I want to show you what a good day of trading looked like, which means we're trading less and we're basically following the indicators that we're supposed to do. So this was the trade that we did on Wednesday, and on this day we actually made $798, which is pretty good. So it was off of just 3 trades. It was these 2 trades during the day and the trade from the night before, which is shown right there. And I just want to focus on the 2 trades that we did during the day, which I was quite happy with. The first trade that we did was at 8 a.m. and basically we shorted this. And the reason we shorted it is, as you can tell here, the crossover occurred. Yes, we're above the zero line, but sometimes this is the more aggressive way of doing it, is you can short from when you're above the zero line when a crossover occurs, but you need to be careful and be able to, watch it very closely, because that could flip on you really quickly. And so, yeah, we entered this when the crossover occurred. And then if you look at the stochastic RSI, it's heading towards the oversold area. And if I look at the equivalent tick-based chart here, the crossover again did occur, and the stochastic RSI is on the oversold area. So with 2 contracts, we entered at 33,350. And then we exited at 33,326. So that's a gain of 24 points. So that's $240 from trading from 8 o'clock to the 8:10 candles. So less than 10 minutes. I'm quite happy with that. And that's why I like this trade itself. And again, you may ask, why didn't you hold on to it? In theory, you know, from 350, I could have gone down to about 200. So that's about, or 250 really. So that could have been $1,000 trade there. Yep, that's correct. I could have done that. But, you know, that's when you have that kind of thinking that makes you greedy and can get you in trouble. With my goal really is when we're up 20 ticks, I place an OCO and I just drag it whenever it can. Unfortunately, on this one, we were stopped out from the trailing stop on the OCO, but I'm okay with that. And then our next trade here, basically this was a long position. We entered at 855. And basically we entered at 33,260. And the reason I entered this is if you look here on the MACD, it hasn't crossed over yet. We are, however, starting to converge. So, you know, from a bright red where it was diverging, we're now converging. So it's a darker red. And you'll probably ask, why did you do that? It hasn't crossed it. Don't you want to wait for that? Well, if I look on the right on the tick-based chart, it actually already crossed here at about 850. It crossed and we were on the overbought area on the tick-based chart. So that gave me a bit of confidence to be able to take this bullish move. And again, this is a more aggressive way of entering a trade. But as you basically learn and trade the strategy you're using, you can tell where there's the safe probability and then the slightly aggressive probability and then the stupid probability that sometimes I do, which I really shouldn't do. But anyway, for what I like about this trade is, you know, we entered at 855, left at 905, so about 10-minute trade. Basically from 33,260, we exited at 33,295. That was a 35-point move, and that's, you know, $350. And ideally, days like this is how I would prefer to trade. You know, I like to be in and out a lot quicker and just get the money and, you know, make it a realized money as opposed to hoping for a bigger move like what happened today on Friday, because sometimes I'd rather just lock it in and be done for the day itself. Anyway, so that was our week. Hopefully you enjoyed the content. Hopefully you enjoyed the analysis that I did. And hopefully that can help you with the system that you have with trading. And if not, well, hopefully you got a bit of entertainment from it. Please do subscribe if you learned something. And if not, please give me another chance. And hopefully your future content, you will learn something.